Hello everyone, I am Taylor, otherwise known as the Wizard, and today I'm going to show you a very easy New York scalping method. I call it the New York scalping method because we look at trades normally just before New York and then into New York session. It's going to be very easy. We're going to start off by running through all the indicators I'm using and their settings, and then we'll get into it. So we're going to go from top to bottom on my screen. We're going to start with baseline overlay. Now, we'll start off with the Star tab just so I can explain what we've got going on. We have the two EMAs that make up the EMA cloud. We have the candle bar colours, which are set so that it's only one colour or another. Everything else then gets turned off all the way until we get to the bottom, where you'll see I have these two plots and these two, which means I have the team ribbon on and that EMA cloud turned on. In the settings, you can see that EMA slow I have set to 13 and EMA fast I have set to 2. And then most of this is standard until we get down here, where you'll see that the trend time frame for the team ribbon is set to 15 minutes. And that's all for baseline overlay. Then we have LMI, which you can see is standard settings, but in the style tab I have turned 3 of the plots off, and I've changed it to circles, and I've put the thickness of the line all the way to the maximum, just because then I can really compress it down and it looks like one solid colour line. And then back D, I've done something very similar. I've set it to area, and I've set the slow and fast period to 31 and 2, and again just squished it down so that it becomes nice and small. Now, it's a very simple trading method, so the things that we're looking for are, I normally trade from about 7 or 8 in the morning till latest sort of 10 maybe, if it was running quite late for the day. However, I probably wouldn't be executing new positions after maybe 9:30. I would only be managing the ones I'm in. How do we find our positions? Well, we'll start at this one because this was the most recent one taken. Now, in theory, if this was at 7, I would have also wanted to take it, but basically what we're looking for is when your cloud will go green at the same time as back D and LMI, and it's ideal if you have a cross through. So, for instance, I'm just going to grab this, like this candle, this white candle here, just as it broke through, that would have been ideal. However, it doesn't necessarily have to be that, because in this case you can see that we're ranging at consolidation and then we've popped up, and that's fine. So that's the most recent trade, and I'll show you the next couple. The day before I had these two right here. Actually, I'll go quickly back to this one and explain how I found my take profit. So my stop loss I just set at the edge of the cloud. Because of how far this candle had deviated from the team ribbon, I just set my stop loss to the team ribbon. And my take profit, normally I aim for 1 to 1.5, so the risk reward ratio just here needs to set 1.5. In this case I went a little bit further because I'd set it to the edge of the team ribbon here, and the reason being for that was that I'd concluded that it was a relatively interesting level due to all of the wicks coming through and tapping in through here. You see it happened quite consistently, so I concluded that somewhere in there would be an important level, and that's how I then stretched it to 1.8. Sometimes, for instance, if a trade like this came through, you can easily get, and again I will measure it and show you. In this case, because the candle was popping through, I would set my stop loss just above it. And you have to look where your points of take profit are. You could have had one here for 1.7 to 1. You could easily have had this if you thought they were just going to chase this wick over here, which would have been 3.3 to 1. And if you thought they might come and chase other wicks, I'm going to leave a level here because of 1, 2, 3, and this little bit playing through here, which would have been almost peak. Then you would have been able to get a 6 to 1 trade in. However, again, we didn't take it because it was just a bit too early in the day. Now, the next two trades, again, very simple. We had a sell from here, again, LMI and back D had gone red. And how did I pick my profit point? I literally picked it straight off this wick, which it then went and hit immediately. And again, it was a relatively straightforward trade. Stop loss just above the previous candles, made it nice and easy. And then I actually got a second trade in at 9:10, where we had crossed through, waited for BACD and LMI, again nice and close to the ribbon, which is nice. And I again just set my take profit to the previous wick over here, thinking that was nice and easy, and that made it for 2-1. If I wanted a little bit tighter, I probably could have gone to like these wicks, or to my standard 1.5, and again that would have been a nice safe position. Again, this one was 3.3-1. If I wanted it to be safer, I could have just set for my 1.5, which would have been here. And again, if you look at the structure, that does line up with all of these bodies, so that's not necessarily a bad thing. But I got this wick here. And I think there's one more, yeah, another pair. Again, now this day I'd started at 7, so I was a little bit early, but there happened to be a okay one. Now in general, I'm not a fan of taking when it's sat and been negative for a while. However, we had a nice period where LMI had gone green and then back to red, and so I took it off of that. Candle, the ribbon was still very, very close to the candles, so that makes it much more okay. It's not deviated like over here. You can see there's a reasonable deviation from the bottom of this candle all the way to the ribbon, where over here it was nice and tight. And again, in this case I actually got 3.3 again, but I'd set that again based on structural reasons, because I concluded that there was a reasonable level in through here based off these wicks tapping, the few bodies through here, and the illusion of support and come resistance in through here. So again, you can set levels based off your technical analysis and zone to zone theory, but you can also do it based off 1 to 1.5, and that's more than acceptable. It's still positive. 1 to 1.5 it would have been here for reference, but I managed to get 1.3, 3.3, and again over here, this one I actually had trailed out. I just went to the top of these wicks, thinking that they would be important and would get filled, and in this case it did. And you can see that I lined everything up all at once. I was a little bit far from the line, so for me I would consider this somewhat far, but in this case I thought that there was enough room to go. In practice it's still only 1.71, you could have missed it and been more than okay for the day. With this method, things to be aware of, I do tend to keep a little bit of an eye on the my levels, just checking where wicks are, what wicks I think need filling. If you need more info on wick filling, you can check out the master's course in the Discord, and you will find wick filling. And I also tend to keep an eye on risk reward and how far away I've deviated from the team ribbon. So for instance, if I wanted to take this trade here at 6.20, it's too early for me, so I wouldn't have, but it's a fair deviation from the close of that candle all the way to the team ribbon, so I probably would not have considered it. Again, we're now approaching 7 AM, and you can see that the deviation is excessive, so there's no real good trade there. If you trade other time zones, you will probably need to trade other pairs. So for New York, I have selected GBP CAD as what I'm finding my favourite pair for this method, just simply because its movement seems to be nice and smooth through New York session. And pre-New York also, you'll find a reasonable amount of movement towards London session. As you can see from some of this going on, and even these, you do get some reasonably considerate swings. For reference, if I'm measuring this, and I'm just going to measure it even from this candle, which is where everything went red, that was still 45 pips to its peak down here. Again, no one's taking it to the very peaks. And if you were to measure, say, this one here, again, that's another 45 pips potential. In general, I'm normally getting between 20 and 40 pips. I would say err on the side of caution and look towards the 20s, because it's always better to get out early than it is to be too late. However, you can also use your technical analysis as guidance, and really try and refine this method down using the technical analysis. So you're getting into it based off of good probability from the mathematical side, and then you're exiting based off of key levels, and if you can't find a good key level, then exit also based off of mathematical probabilities, and that would be a very optimal way of handling it. If you want any more information on it, just contact us in the Discord. If you leave a message in the chat and it doesn't get seen to, feel free to raise a support ticket using the general support room. And other than that, have a good trading day. I'm going to see what we can grab today from GBP CAD, and I will see you all next time. Thank you very much.